Are you a millennial or are you a Gen Z? Now this is the ultimate insurance guide for you. Anyone who's born between the year 1981 until 1996 is perceived to be a millennial, whereas if let's say you are born after the year 1997, you are considered the new generation that we call Gen Z. Without realizing, millennials now is aged between 25 to 41 today, and the very reason why I came up with this video today is because I got this question recently that, Chanel, I'm a fresh grad and I'm actually currently on my first job, so based on your advice, what should I prepare financially for myself and also for my insurance? So I then realized that, hey, this young man right here is a 25-year-old. So actually, I'm dealing with clients who are actually getting younger and younger, and I realized that, hey, Gen Z. So if let's say you are Gen Z, that you are fresh grad, or you are the young millennials, you are between mid-25 until the early 30s, what should you prepare for yourself for your insurance? The first suggestion that I would strongly suggest is to get a health or a medical insurance. So some employers do cover this. Some of the people that I met, they still have the coverage under their parents, but I would strongly suggest that if you have the budget, always buy this insurance under yourself. Probably buying the medical insurance out of your own pocket can be a little bit expensive because you're eating up on your income, but do not skip this part. Saving money for something else but not getting yourself a health insurance may not be a good idea, because anything that goes wrong may cost you a fortune. So if let's say you're a single person, you can consider getting a comprehensive plan as early as possible. You can easily get plans that cover you from minimum annual limit of 1 million ringgit up to a few million right now at a very affordable cost, because you have the budget, you are very young. So the amazing part of buying this early is that you always get to pay for it cheaper, really a lot cheaper, because you enjoy the fixed rate if you enter into plans such as investment-linked plans. Hello guys, I'm Chanel Chong. I'm an insurance planner, asset planner, and a co-founder of property management company. I upload regular videos about financial advices, insurance planning, and also asset planning. If you really love these topics, don't forget to hit up to the subscribe button and subscribe to this channel. So the next insurance that I strongly suggest that you can go and take out will be life insurance. So a lot of people may not realize the importance of getting a life insurance. So life insurance simply is a compensation that we get if we pass on. Our spouse or our next of kin will be able to get a sum of amount as a compensation for our loss. So for example, if let's say you're single, do not forget that you're equally as important as well, because you play a role in bringing back the income to your family. So if the family were to lose you, they will lose your income as well. So the rule of thumb when it comes to how much to cover, if let's say you're a single, will be around 10 to 20 times of your annual income. If let's say you have no commitment at all. But what if you are a single person but yet you have some commitments? That's when some of the calculation will kick in, for example, to calculate how much loan you have, how much is your living expenses, because as you get promoted, you may spend more on your living expenses. And how about the living expenses for your parents if you need to bear for theirs? Okay, so things may get a little bit more complicated if let's say you're married. So there will be more concern on the household commitment right here, children commitments, and also your education funds, how much to fund them when they are aged around 18 years old. By actually calculating all this in your mind, you can somehow actually get the idea that, hey, how much should I prepare beforehand so that my family is actually well prepared during my absence. I have also done up a video regarding to how much insurance you need to cover for yourself. Do check out the video that's actually under. I'm actually attaching the link down below. Well, why life insurance is actually so important, because by you preparing them, you will avoid your traumatized family members to face any financial crisis upon losing you. We can't decide when to leave the world, but the very least that we can do is to prep our family in case we can't make it by their side. The next insurance that you should consider will be critical illness insurance. This is to prevent your loss of income just in case you are being diagnosed with any severe illnesses. Well, this is very different from the medical insurance that I was telling you about, which a lot of people may perceive them as the same. A lot of people may mistake them as the same thing. While critical insurance just pays out a lump sum or regular compensation when the life assured is diagnosed with some severe illnesses such as those that's being stated and covered in the policy. So the examples will be heart failure, kidney failure, and even cancer. Medical insurance, whereas on the other hand, covers only the hospitalization and also the consultation fee. They don't cover anything further if, let's say, regardless of what diseases that you're being diagnosed with. Okay, so critical illness is actually to prepare ourselves just in case we can't work, we lose the income that we're supposed to earn back home. So why is preparing this so important? Well, years ago, I came across a real life story whereby an employee suddenly had a heart attack. He used to work in a super hectic working environment where the deadlines, the workloads are never ending. He was holding a high post. There was so much of expectation at the moment when he was suffering a heart attack. Well, doctor saw his workload, saw how hectic his life was, and doctors told him that you need to take some break off your work. And he even suggested that, hey, why not you just talk to your employer to give you some work that's actually more relaxed. He went back to the office and he was immediately demoted to an admin post without any further notice. The reason was because the employer was very fearful to assign him with another challenging high post again. They felt bad to also terminate him. That's why they decided to demote him into an admin post that could still fit him. At that moment, even though he was still under employment, he was truly disappointed that he needs to face a huge pay cut. Not only that he felt that he was mistreated, he realized that he no longer could operate the company's operation like he used to be, because he also at the same time need to be careful about his health condition. And he actually had a second thought of going to another company. But he also told himself, would it help when the company knows that I had a heart attack before? The answer is no. So he regretted because he didn't prepare for his critical illness either. He thought that he could be healthy and he didn't even have any family who had this heart attack before. With the current technology, we are highly confident that we can recover despite being hit with an illness. But just don't play along with the fire, because buying critical illness, if your budget allows, is really a prevention act just to prevent the loss of income that you're going to suffer. So the next insurance that you can consider will be personal accident. This is perhaps the cheapest insurance among all categories, and this insurance is actually payable whenever an accident arises. If a person is hospitalized or passed away due to illness, then this insurance will not apply for compensation purposes. It has to be purely accidental. I'm sure everywhere that we go, we can hear about accident happening here and there without people foreseeing that to happen. It's really totally something that we can't avoid altogether. Since accidental insurance is really something that is very affordable, why not prepare it again at a young age? Last but not least will be the endowment planning insurance plans that you can consider. Endowment plan is more popularly known as saving plans among the Malaysian. Endowment plans usually offer a stable return. It is almost risk-free return. It can be very predictable because most of them offer guaranteed rate, or maybe they offer very stable return depending on the companies and depending on the plans and the funds that are actually involved. So it is a very good financial tool for saving, for example, with a no-brainer. Let's say you're so busy with your work, you have no time to manage your finances. Now this is a very good no-brainer for you to really go into it. Endowment plans provide a disciplined route for your savings, which can come in really handy in case of a financial emergency. Salary people, small business people, or even very busy professionals such as the doctors, the lawyers can also look into this plan to meet their long-term financial security needs. It doesn't really require a lot of time because all you need to do is just tell the professional insurance agents like what is the return that you're looking at and what is the budget that you can go in every single month. And another thing will be the better one, which is how much you wish to attain for retirement or for whatever your saving objective is, right? So it is very optional for the endowment plan, but definitely a suitable plan for the millennials or the Gen Z who do not have too much savings or investment ideas yet. This endowment plan may work some wonders for you. In fact, endowment plan is also very popular among the young parents to prepare for their children's education funds when they are due for uni and colleges in the future. If you have watched this video from the beginning until now, do not feel overwhelmed with so many types of the insurance plans that you're being advised to prepare. Bear in mind that insurance planning is a long-term planning whereby you have several years to prepare for them slowly. It is better for you to slowly accumulate a few policies that suits you at different age, at different stages of your life when the budget allows. Do not forget that insurance planning is a planning that is very long-term. It's minimum 20 years or sometimes even more. So the healthy budget for you to allocate into your insurance will be around 10 to 15% of your income every single month, and another 20 to 30% perhaps into your savings, endowment, or other investments. Hey, I hope that you have more clarity now in your own insurance ideas. If you wish to know more about how to plan for your own insurance, feel free to contact me and I'll see you again in my next video. Bye guys!